Are you aware of how massive dividend contributions to total return in the market have been over time? If not, you might be in for a surprise. Welcome to Outsider Millennials, where we will learn about stocks and dividends using simple explanations, stories, and examples. In this video, we will learn why are dividends important? What is the contribution of dividends to the total return in the market? And we have an example of a monthly dividend stock that has a high yield and has increased its dividend for 7 consecutive years. So what exactly are dividends? According to Investopedia, dividends are distributions in the form of money by a company to its shareholders. In other words, we can say that dividends are additional money you get from a company for owning some of its shares. And if we're looking for higher and better returns from our investments, we can always reinvest the dividends that we are already getting from companies that we have invested in, and over time you will see how your money grows. To elaborate more on why dividends are a must, let us look at the following data. According to Hartford Funds, these are the dividend contributions to total return in the market by decades. Now what I want us to focus on here is that 41%, because this was data that was gathered from 1930 all the way to 2020. This data indicates that on average, dividends contribute a 41% of total returns in the market per decade. So if we don't invest in dividend stocks, we are missing out on extra money. So do you want to miss out on extra money? Because I don't. We cannot continue without mentioning some of the risks of dividend investing. Not everything is as easy as relaxing on the beach with pina colada while watching our investments grow every second. Otherwise, we would all be rich. Going back to reality, here are some of the cons. You may have to exchange a bit of price growth in the stock you invested for the potential of a higher dividends payment. Second, dividend payments can be reduced or even completely cut. Moving on to the example of the monthly dividend stock, Stag Industrials, a real estate investment trust that focuses on acquisition and operation of a single tenant, industrial and logistics centers with an emphasis on distribution centers across the United States. According to the latest presentation from Stag Industrials, their investment portfolio covers 60 plus markets with exposure to 45 plus industries. In fact, one of their largest tenants is Amazon, representing about 4% of their portfolio. Moreover, we are able to see that 40% of the portfolio handles e-commerce activities. One reason for that could be the rapidly increasing e-commerce sales in the United States. Finally, we move on to the best part of the video, fundamentals. As of the time of making this video, we have the following. Stag pays a dividend of 3.42%. This dividend has been growing for 7 consecutive years. And look how beautiful that 5-year chart looks. It is increasing nicely. The 5-year average rate for revenue growth is above 17%. Meaning company revenue has been increasing for 17% annually. We also see an increasing operating margin, and this is exactly what we want to see, because this demonstrates that the company is becoming more profitable over the years. In 2017, it ended with above 19% for operating margin, and in 2020, about 29%. The 5-year average rate for return on investment is 15%. Meaning 15% total return annually on your money invested over the last 5 years. The 1-year analyst target estimate is 11% to the upside. So do you have a monthly favorite dividend stock? Let us know in the comments below. And this video is only for educational purposes. We must do our own research before making any investments. Like, comment, and subscribe so we can continue to learn.